Let's go. Hey guys, welcome back to Hot Trades, the podcast with your host, my partner, Rob, and myself, Blaze. So last week we spent a lot of time. Rob, how's your weekend? Uh,
It's good. I needed
yeah,
it. Long
okay,
week.
good. I know it's been a long week. So last week we spent a lot of time talking about market psychology. Kind of an introduction into the mistakes we make. And Rob gave quite a few examples of the mistakes we make and how we potentially fix them. And this week, we will progress a little bit more into the market, kind of dig deep into how the market really works. I get a lot of questions on stream about, like, is the market rigged, right? Can the market maker see my stop loss, right? Maybe I should just give up on the market because I just don't get it. And it just seems like an unfair playing field. Right. So this week we will talk about liquidity, right? We will talk about the market makers and what their job is. We will talk about how the market just works in general and a few examples or just like strategies on how you can, kind of succeed in the market. So if you enjoy it, please leave a comment in the comment section. But maybe give us an idea about the next topic, and maybe your comments might be the next topic we talk about already. So again, leave a comment if you enjoy the content. Leave a comment. Don't forget to hit the like as well. Share the link to your friends, or share the link to to all the people that say, hey, yeah, the market is manipulated and maybe I should just give up, right? So again, we will kind of begin by looking at how the market works already, and again, like what a market maker's job is. So Rob has kind of put together a nice little presentation, and we will start with that, and Rob. Yeah.
Sure. So
Okay.
are market makers against you?
Hmm.
So I would say that what would you say, Blaze? Most of the time everyone
Hmm.
thinks that they're against us, right? That it's
Yeah,
something
exactly.
that they're just literally there sitting down waiting for Robert to put a trade and just
Exactly.
screw me over. And
Exactly.
the truth is that if we think about it, it's it's yes and
Yes and no.
right?
Yep.
Why?
Yep.
So I would say what we would have to answer that question. We first need to understand what a market maker's job is, right? What is
Yep.
their job? Their main job is to provide liquidity, right, in the
Mhm.
market. That's all their job is. They're
Yep.
not there to take you out to do all these things. They're literally their job. They're not even focused on. As a matter of fact, you're going to see later on. We're going to talk about. They're not even focused on a direction,
Mhm.
either long or short today or long tomorrow, or they're focused on finding liquidity, providing liquidity, and then we'll see later on an algorithm that's finding the liquidity for them. So
Yep.
market makers basically provide liquidity in the market. The wider the spread, so there's spreads, against the bid and the ask. So the
Yep.
wider the spread, that's where they make their money, right? So
Mhm.
less liquid assets, you'll have a
Yep.
wider spread, as you've
Yep.
seen, and then
Can you
more
talk
liquid
about,
assets. Go ahead.
yeah, can you talk about, because I get this question quite a bit on stream, like what is the spread? Why is the bid all the way at $5 in this stock and the ask is all the way at $7? Can you talk a bit more about the spread, and then we can
Right. So then
yep.
it's all supply and demand. It's all bidders, people that are bidding, and people that are asking. Right. So when you have less liquidity,
Yep.
they need to find balance in the market. They need to provide that balance. Right. So what they're doing is, if there's if there's more, if there's less liquidity, then you have a wider. Maybe you could explain better, but there's a wider gap there because there's
Hmm.
not too many people. There's not that
Hmm.
many orders in those
Hmm.
particular price points, right? So then
Hmm.
the way for them to create that balance, it would be, it's a bit wider, and then in between is where they kind of like they're making their money, right? Because they're
Yep.
asking for this much, but then obviously if you bid at $4 and then they're asking at eight, then
Hmm.
when they make your order, they take that order and then now they're able to cash in on $8,
Exactly.
let's say, so it's
Exactly.
that spread is because it's just less liquid, right?
Hmm.
And then we're gonna see why.
Hmm.
You would think, like when we're talking about this, you would think logic would say, well, then it's better to be with more liquid assets. Why do we sometimes trade these low floats and lower liquid assets, and we're going to explain why too. There's ways to
Yeah.
do it. There's a
Mhm.
bit of everything in the market for you, right?
Yeah.
That's why in
Yeah.
the futures market it's very liquid, depending on what you're trading, like the derivatives of um of the SPY, of the QQQ, and all that. And then you
Mhm.
have forex as well. And then you
Mhm.
have the regular markets. You have your apples and which are very liquid, and then you have the lower floats and the
Yeah.
lesser liquid. So,
Yeah.
well, once I say, I think what I want people to understand is, while we're talking, put in your mind all the things you've done already with hot trades, if you've been with hot trades, and if you haven't been with hot trades, what you and whatever little or more experience you might have in the market,
Mhm.
try to put it together with what we're going to say today.
Yeah.
Okay, so where was I? So then the wider spread, the more money they make, and then that's why it's important to understand these concepts, right? I think
Mhm.
that's why we want to talk about this today, because the concept of what market makers do is everything, and that's why I say market structure is everything, because
Yeah.
the structure that the market makers are creating is
Mhm.
what we have to understand. Why? Because
Mhm.
they're the ones that are moving the markets. We don't move
Yeah.
the markets.
Yeah.
We just basically put in orders, trades, depending on how we've learned, right? Which is
Mhm.
going to go to
Exactly.
the second part now.
Yeah.
Now we'll go to our
And
second part.
yeah.
If you want, I'll take this out.
Oh yeah, and to Rob's point, again, like the reason we're doing this is because, again, like these questions come up quite often, right? So, and it's really, really, really important to understand, like, what their job is, in order to understand, like, what you have to do to to progress, right? So again, progress, 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 right? So really understanding what their job is will help you, at the very least, understand what they're doing and see if you can find ways around it, right? So like Rob mentioned, liquidity, right? Again, their main job in the market is to provide liquidity, right? So most of the time when we talk about, like, hey, I had my stop loss at this price and my stop loss
You're
executed,
going to see
well,
it.
it's because you called it that liquidity, right? So um, yeah.
So why are they not out to get us? And
Yeah.
that's the main answer. They're not
Hmm.
out to get you. Why? Because the market is algorithmic. Keep that in your minds. It's an algorithm that they have. It's systems that they have running, just providing liquidity, looking for those areas of liquidity. And
Hmm.
how is that created? They're not focused on a direction, like I mentioned earlier. They're just focused on liquidity. It's a software that's looking for areas where people are putting their orders to provide liquidity for them, right? So they see the orders, yes, they do. They see our stop losses, they see our limit orders.
Yeah.
They see everything, right? They see
Yeah.
it in the system. Why do they see it? Because that software has to go in and start providing liquidity for all those, find the buyers for the sellers, right?
Mm.
So while it's doing that, price is constantly moving to provide liquidity. It's just
Yeah.
moving. That's why you see that's why like I said, now you're gonna be able to put two and two together, right?
Yeah.
That's why price doesn't always go like this or doesn't
Yeah.
always go like this,
Yeah.
because it's going up,
Yeah.
finding liquidity, then comes right back down. What is that? A retracement? Yes, it's just basically
Yeah.
finding prices, getting those buyers down here or
Yeah.
sellers, and then coming back up. If it's a trend day, they're just getting these orders here, coming back
Hmm.
up to a higher, selling off, going back
Hmm.
up, selling. So you get a higher high, or a lower,
Yeah.
lower low. You know what I mean?
Yeah.
Or a range day is, what is a range day? It's just basically buying it. They're selling at the top, supply zone,
Hmm.
buying at the bottom, selling at the
Yeah.
top, buying at the bottom.
Yeah.
That's just basically saying the market in reality right now is in a range. They're not really knowing where it's price discovery. They want to see where people are willing to buy more or
Hmm.
less. If they don't see as many orders coming in, other
Yeah.
market makers are not doing it. What
Hmm.
do? They just stay ranging. So I
Hmm.
want everyone to keep that in mind, right?
Yeah.
So it's price constantly moving. We were all taught, and this is so important. We were
Yeah.
all taught to trade the same way. So
Yeah.
we have areas of support, we have
Yeah.
areas of resistance. Now we're learning supply and demand that we've been teaching in hot trades,
Hmm.
um, liquidity zones, all these things like that, right?
Yeah.
Double tops, trend lines, all those things. You're going to realize that that's all just areas of liquidity.
Yeah.
So we were all taught to trade the same way. So the areas of liquidity are created. Example. So those areas of liquidity will be created because of that. So get this. An example. We all buy at support
Yeah.
and we put a stop loss below. So
Yeah.
what does that do? Everybody's putting, they're seeing, they put their little line, like
Yeah.
everybody teaches. You put your little line up. That's support. and the
Yep.
price goes there, and then we're going to
Yep.
put our stop loss. So what are we doing? We're all trading the same way. So the
Mhm.
market is very easy. They're going to come down and get liquidity. Why is there support? Because that's where everybody's putting their buy,
Yep.
their limit orders and their
Yep.
stop losses. Now
Yep.
this is where it gets a bit interesting. Why is it that they're out to get us sometimes? Yes, because all the algorithm is doing is if he sees if he sees your limit order and your
Yeah.
stop loss here, and they
Yeah.
see a lot of stop losses here, right? Their stops, and they
Yeah.
see their buys here.
Yeah.
It's gonna buy. It's gonna start taking these orders, taking these orders, taking these orders. It took your buy order, but guess
Yeah.
what? It sees all the stops down here. And
Yeah.
what's the algorithm's job? I can't leave. I still got orders down here. I got to take those. So it
Yep.
comes down, stops you out, right?
Yep.
It stops
Yep.
you out. It took your obviously you bought. Now you gotta sell to get out. So
Exactly.
it took your order. It sold, and now it
Yeah.
goes up. Oh, it went
Yeah.
against me. Oh, these guys are out to get me. No, it's
Yep.
just that you know that they're doing that. So what do you
Yeah.
do? Yeah, I've been doing that lately. I've been seeing prices. I've been seeing in a chart like you see
Mhm.
pricing going up, especially on like last week.
Mhm.
That the market was just terrible. It was like going against us. It would just move like maybe uh, 4 or 5 ticks, and then it would like reverse like really hard, and then people were going long, and it would just grab you. So
Yeah.
um, I was I was saying to myself, what is the algorithm doing? Like
Mhm.
obviously, people right now,
Mhm.
retail is gonna get in. So what I'm
Yep.
gonna do, I'm gonna sell.
Yep.
Right, I'm gonna sell because
Yep.
that's what the algorithm is gonna do. It's gonna sell to grab these, to take them out and
Yep.
take the order and just took the liquidity to go lower, right?
Mhm.
So that's why
Mhm.
it's so important to understand market structure because if you have a bias, what I've been teaching to the group in this course, if you have a
Mhm.
bias, which
Mhm.
I know most of the time a lot of traders tell you don't have a bias in the market,
Yep.
and when they say that, I'm going to fix it a bit. You should
Mhm.
have a bias now. In the sense in futures especially, I go short, I go long. I don't have. I'm a bear and
Mhm.
I'm a bull. I don't care. I
Yep.
just go where the market's going, right?
Yep.
So what happens is that I'm just looking for the same thing, right?
Mhm.
So I have to have what is the market doing. So I look at a longer time frame to see what the
Mhm.
market is doing. If I see in a 4 hour chart that
Mhm.
the market is trending down, is under a VWAP, it keeps maybe rejecting against that VWAP, then I know that that VWAP is a very major area of liquidity that is
Yep.
grabbing liquidity and coming back down, grabbing liquidity and going back down. So now
Mhm.
I have a bias. The market is looking for lower prices. So on
Yep.
a chart, what would we do? We would find a swing low. Very
Yep.
simple. I'm not going to go to a swing low of the 4 hour chart. The swing low.
Yep.
You find that
Mhm.
swing low. That's an area of liquidity that algorithm is looking for.
Yep.
It's going to continue to go down unless something happens in the middle that anything can happen, right? It can just flip
Exactly.
back up. You might think it's going there,
Exactly.
but that area of liquidity is still there. It's not disappearing. It's there.
Mhm.
So it's
Mhm.
gonna at some point it's gonna come back down to that area, right?
Mhm.
So most
Exactly.
of the time, so then you have your bias. That's where it comes in. That sometimes we say, okay, if it's below this price, we're taking puts, let's say, if you're an
Exactly.
options trader, or if you're a
Exactly.
futures trader, I'm selling, I'm going short. And then if
Yep.
it's above this level, this price, I'm going long. Why is
Mhm.
that? Why do we think that? Because we most of the time we just say it because we're used to it because we know, okay, above this there's support
Mhm.
above, but in reality what we're saying is there's liquidity up there, those
Exactly.
areas of supply and demand. That's why some indicators, which we're going to talk about this in
Yes.
the
The
future.
next example.
I
Yeah.
think our
Yep.
next podcast is going to be something like what we were talking about, Blaze.
Yeah.
Are
Okay.
indicators good or bad, right? Like
Exactly. Yeah.
if you can find areas, if you have to, if you can have a software, a system that could find
Mhm.
the areas of liquidity for you, then why not use it? You see what I'm saying?
Exactly.
Then you just keep
Exactly.
have your target. So anyway, I'm not gonna keep
Exactly.
them, but
Exactly.
I hope that just by understanding that concept,
Yeah.
people or start understanding now. What would you do?
Mhm.
Maybe where you would put your stop usually, put your buy
Mhm.
order.
Mhm.
Why not do
Mhm.
that? Put your
Yeah.
buy order where a stop would usually be, and
Mhm.
then maybe put your stop, a couple of ticks below, or a couple of, whatever,
Mhm. Mhm.
whatever percentage you want below. Try
Mhm.
that, and then if
Mhm.
it goes to your area and it takes off, you could just move it up and get back in. It didn't take you
Exactly.
out. You see what I'm saying? And
Exactly.
you're now thinking like a market maker.
Yep. Like a true criminal is what you're thinking like. And another example to Rob's point, again, speaking of like areas of liquidity at the top and at the bottom, like just to give an example, right? So the reason why, right, again, like the reason why people sometimes buy these breakouts, the reason why you see people jump into these stocks and you have massive explosions is because I bet you when you look at a resistance level like this, I bet you, again, maybe just a bit of an introduction into the indicator I'm using, the algo, right? So usually with this indicator, it will show you green zones at the bottom for demand zones, for again for area, like an area of liquidity at the bottom, like your demand zone, right? And it will show you a red box at the top for an area of liquidity, like a supply zone, right? So you have the two levels. You have the green, the demand zone, and you have the red at the top for the supply zone. So in this case, I bet you, and those boxes will disappear when that zone is gone. So when the supply zone is gone, the box will disappear because it's potentially no longer valid, right? It always is. But in this case, let's say it's not valid, right? So I bet you as this stock finds a bit of resistance at that area, there's a supply zone. There's a red box right there, right? There's a bit of a red box, right? You can see the green zone at the bottom, which is a demand zone, right? So, to Rob's point, instead of having your stop loss at support, right? Or at an area of liquidity, right? You can have your stop loss below, or you can look for your entry below that area instead, right? So, or another strategy that we talk about quite often and something that we teach, right, is look for the curl, right? So again, let it go below that demand zone, right? Let it break down, let it execute those stop losses, right? Wait for that curl. Let the stock start to go up and provide and actually confirm to you that okay, you know what? I grabbed my liquidity, I grabbed the stop losses, I grabbed the entries. Now I'm starting to go back up, right? Before you execute your order. And that would be your demand zone. Again, you can see the indicator with the demand zone and the green boxes at the bottom, kind of reminding you of the liquidity. At the same time, right, you can see that whenever we do break above like the supply zone at the top, right, you have massive rallies. So that potentially becomes another strategy. Again, we will try not to get too far into this. I think Rob, things are, we're potentially going too far already. This is something that we will talk about on the next call. But that's just a bit of an example and something that we spend a lot of time teaching, right? So, anyways, Rob.
No,
um,
I think that's such a great example. Yeah, I got excited when you said it because the
yeah.
curl. I mean, and that's what I want people to click in their
Yeah.
mind when they're
Mhm.
seeing this podcast and the way we trade is
Mhm.
that all those things are just basically that in the background. So when you're seeing the curl, it's like you're telling people, let it stop out everyone. Let
Yeah.
it let it do what it's gonna do. Let the price, let the system do what it's gonna do,
Mhm.
and then let it tell you, and then you follow what it's doing, right? So it
Mhm.
went down, it it
Mhm.
it took what it was gonna take, the liquidity, now it starts moving up.
Yep.
Now you're
Exactly.
seeing it. Whoa, the indicator's turning green, meaning that now buyers are coming in, it's
Mhm.
getting more bullish. Okay, now I have a higher probability. And this is
Mhm.
a game of probability. What you want
Mhm.
us to do is get it. You don't want to get into a, it's buy low, sell high,
Mhm.
right?
So,
But
yes.
also when you're buying low, you
Mhm.
want to buy low with a higher probability, right?
Exactly.
Because you can sometimes buy low, and we all know that
Mhm.
sometimes it will go right back down and then it'll continue going further down. That's
Exactly.
why we have to see,
Mhm.
is there more liquidity below, and if there is,
Exactly.
then I got to be very careful. That's
Yep.
where it's what you say, that it's very nice. Like when you say, when
Mhm.
you joke around about that's cheating, but it's
Yep.
true because it's a good way.
Yeah.
It's a good way psychologically to think about it. I'm not going to cheat because they're
Yeah.
going to screw me if I cheat. You know what I mean? So I'm screwing myself. Like we tell kids, right? If you
Yep.
cheat, you're only cheating yourself. So if
Exactly.
going down now, I know that below, maybe let's say prices at Apple, it's at 179, and then
Mhm.
below at 175, there's another
Yeah.
green demand zone where there was another swing low.
Mhm.
You know what? Price might go a little further down because we're on a downtrend. You see, so
Mhm.
now you see
Exactly.
all of the market structure together, not just
Exactly.
because it's a demand I'm going in. No, is there
Exactly.
more demand below? There probably
Exactly.
is. Now, if there's more demand below, is
Exactly.
there a trend going on? Is there a downtrend
Exactly.
in a
Yep.
longer time frame? In the
Exactly.
shorter time frame, I might be in a range, but in a longer time frame, am I
Yep.
going down? If I
Yep.
am, then maybe there's a higher probability it's going to go down
Yep.
for lower prices, right? So then I
Exactly.
wait. I let it go into my
Exactly.
demand, and then if it
Exactly.
starts curling, now I got my confirmation. It might curl
Exactly.
up, and then it might start faking people, and then go right back down. Then I
Exactly.
wait. We were
Exactly.
waiting, and I'll give you an example
Yes.
on. on Friday, we were
Mhm.
all waiting, and I realized that price is wedging. It kept
Mhm.
on, going up, ranging a bit, but then the range kept getting tighter, tighter, tighter,
Yeah.
tighter, tighter,
Yeah.
and I drew the wedge,
Yeah.
and everybody was just waiting for the wedge, and we were just cracking up, like laughing, chatting, like we were saying,
Yeah.
it's gonna break either up or down. We gotta
Mhm.
wait for it. When it happens, we're gonna go.
Yep.
So it broke,
Mhm.
Blaze. It broke.
To
Boom.
the upside.
Confirmed to the upside. It confirmed the
Okay.
candle,
Yeah.
and then it started like it's. So I went in long. I was
Mhm.
about a point or maybe up, and then I
Mhm.
think somebody, a newer trader of ours, that
Mhm.
he's experienced.
Yep.
He wrote. He said, "I'm getting out. This is worrying
Yeah.
me." And I was at the same. He was saying that, and at that moment, I was selling. I said, "I'm
Yep.
getting out," because usually when it was so long,
Mhm.
wedging was like creating
Mhm.
that pressure, right? I said something's gonna
Yep.
blow.
Yep.
So usually what technical analysis says, when it wedges and it breaks out, then
Yeah.
that's when so it broke out, we
Yep.
went in, but it just went like boom. It only went like 1 or 2 bars,
Yeah.
3-minute bars, and
Yep.
it stalled.
Yep.
I get out.
Yep.
But then I said, that's so weird. Like, what did it do? Literally, it liquidated.
Yep.
Boom. We had one huge red candle that just ripped down. But
Wow.
that, if you see, keeping in mind this process, which I was so caught up in the moment, like I wasn't really analyzing everything. I was
Mhm.
expecting the breakout. It broke out, and then
Mhm.
it just stalled. So I
Yep.
should have known this is gonna drop, because
Yep.
it grabbed whatever it was gonna grab. Now it's gonna liquidate. A liquidation is when you see
Yep.
it grab whatever, and then it just drops. It's just, it took everything. It just, a
Yep.
liquidity grab, and it drops.
Yep.
Well, that's where you see those huge wicks.
Yeah.
So
Exactly.
I did that, Blaze, and it was another like lesson learned for me, especially
Yeah.
like after I journaled it. If I
Yeah.
ever see something like that happen again, that's a
Mhm.
great opportunity to go short, because
For
the
sure. Yeah.
market is basically telling you
Yeah.
it's not. I'm not gonna go any higher than this. I'm not taking those. I'm not.
Yeah.
It's not willing to go higher. So
Yeah.
that was really interesting what happened that day. That was one of the few times I've seen that.
Yeah.
But it was really interesting. I don't know if you remember. It was in the spy should have done the same.
Yeah. Yeah.
I mean, it ripped down like big
Yeah.
time, and then it started going down. But our
Yeah.
bias the whole time was
Was
short,
to for the breakout.
short, right?
Yeah.
It was the
Yeah.
whole time short. So we got faked out because we would just think we. It took so long
Mhm.
that we kind of just like forgot about it. You know what I
Yep.
mean? And then all
Yeah.
of a sudden it started breaking up. Okay, I'm going long, but
Mhm.
then it actually ripped down and it went down. So it continued doing what it was supposed to do,
Yeah.
because the downtrend continued on the 4 hour. It was telling us I'm going down to get liquidity further down. You see, so
Exactly.
if we have that bias, I mean, if you have a bias like that
Mhm.
based on this, what we're talking about, it
Yep.
should help you even with liquid assets or less liquid, which I wanted
Yeah.
to kind of talk about too. So
Mhm.
the way you teach with those less liquid, it
Yeah.
doesn't make it any less important, right? So logic will
Mhm.
probably tell you, well, the more liquid, the better. Yeah, probably be. But if you know how to play those
Yeah.
less liquid, you're gonna get a stronger move,
Yep.
right? But what are you looking for? Lower prices. You're looking for an
Exactly.
area of support, like you show, an
Yeah.
area of support where it's constantly like just dead there, waiting
Mhm.
for volume to come in, and then you're at a great moment. So when it takes off,
Mhm.
or maybe curling up, now because most of the time it's even there and you don't get in. You get in once you see the momentum, right? So
Exactly.
even that is important to know. Okay, looks like prices are where is where this is the, let's say, the low, right?
Mhm.
Or it's finding that base, like you say, or that bottom. You know,
Exactly.
it's finding that bottom is because it's basically finding prices where, what is it doing? So go back to the algorithm. What is it doing
Ex-
there?
Yep.
The algorithm is just saying, no, there's nothing.
There's nothing to catch.
Yeah, there's
Yeah.
nothing. There's nobody selling any.
Yeah.
No, there's no lower prices that are. There's no bids. There's no. So I'm just
Exactly.
going on. We're just until
Sideways.
liquidity
Yeah.
comes in, and then it
Exactly.
takes off. See what I'm saying? When
Exactly.
volume comes in.
Exactly. And like this might be a really good example, Rob, because just listening to you explain that and looking at this to the left hand side, you can clearly again, like, Rob has said, like, like sometimes having a bias is a good thing. And this is a common like statement that people use in the market, like the trend is your friend, right?
Mhm.
So
Correct.
like when, as we're trending down, yeah, you might look at this and say, okay, like, okay, yes, I'm looking for this demand zone. I bet you there was a demand zone. There was a liquidity area here, right? So, you can look at this and say, yes, right, we're creating a nice little base, right? I'm waiting for the curl, I'm waiting for the breakout, right? But at the same time, this stock has been trending down the entire time, right? And so what happens when you break below that level? Well, it's breaking down because again, like it's grabbed everything it grabbed and it's looking for the next liquidity area. Well, where do you see the next liquidity area? All the way at the very bottom. And that's all it's doing. It's breaking below this area because it has everything it has, but it sees more at the bottom there. So it's running down to grab some more. Right. So yeah, that's really interesting, Rob.
And can I
Right.
and can
So
I mention one more thing real quick, which I think is we're giving too much because we want to teach
yes.
this, but
Yes.
those EMAs, those
Mhm.
EMAs,
Mhm.
the kernel, all these things that we talk about,
Mhm.
when you see it respecting it, what
Mhm.
is that? There's
Yep.
liquidity right there.
Yep.
A trend line, an EMA, a 20, like you said, you like the 50 or the 20.
Yep.
That's your gold one,
The gold one is the 50.
the 50. So in
Yes.
this case, this is a what this is a 1 hour.
This is the 1 hour. Yeah.
So if you notice on this in the 1 hour on trending
Mhm.
down, it
Yep.
would grab liquidity almost at the 50 EMA.
Yep. Exactly.
That means that there's the sellers there.
Yep.
Why? Because we all trade the same way. We're
Exactly.
creating liquidity. How?
Yep.
By putting our by people putting their sell orders or
Hmm.
their sell limit orders right at that 50 EMA.
Exactly.
You see? So once
Exactly.
you see it, other people see it and they do the same thing.
Exactly.
You
Exactly.
see? So it's all
Yep.
like a hive mind, and they know that. So that's
Yep.
how market makers, But now, if I go back to my little slide here, one thing I just wanted to say was this. Let me put my little okay right here. Nothing emotional about it. It's all technical.
Hmm.
Mechanical with your orders, it's out. It's but with your orders, it's almost organic. It
Yep.
seems organic, right? Because you're putting in the orders in it, but it's all mechanical and technical. It's just
Hmm.
doing what it's supposed to do. There's nobody
Exactly.
there waiting for Blaze and waiting for Hot Trades to put
Oh
in an
yeah.
order. It's just
Exactly.
looking for those areas. Now, if we now do dumb things, is that most of the
Exactly.
time we trade and we lose. When you look back, it was our fault.
Yep.
Oh, I shouldn't have done this, or I got too emotional, or I got out too early, right? Or I got out, I put the stop loss too short, or I did this, or I did that, But now, if I hopefully whoever sees this can keep in mind the
Hmm.
liquidity aspect and how the system is running, right? So the
Hmm.
system is not rigged. The system
Hmm.
is configured to provide liquidity and look for those areas of liquidity, right?
Yep.
Then I
Yep.
have here with that alone, if you know technical analysis, what I just mentioned, it should change your trading style completely.
Yep.
So we're hoping that after
Yes.
seeing this, with the knowledge that you have already,
Yep.
traders who's watching this should change a bit your trading strategy because you already know most likely the basics of let's not say supply and demand. Let's just say
Hmm.
support and resistance lines,
Yep. Hmm.
EMAs, double tops, double bottoms, stuff like that. If you
Hmm.
have all that in mind, think about this is a market that's providing liquidity for
Yep.
those people that are putting those orders in the same places we always put them. So
Exactly.
what would you do if you were, you know what I mean? Or what would you should do something similar to what they're doing. Most
Hmm.
of the time, not 100% of the time, we never know, but most of the time, I think if you have that mindset, you have more wins than losses, I would say,
Yep.
you know?
Exactly. Yep.
And then that's why it's a must for traders to understand market structure, which if you come and join Hot Trades, we're gonna be teaching that soon, market structure, and
Hmm.
then how liquidity provides through supply and demand, which I'm a market structure and supply and demand trader. That because I want to trade the way the market makers trade, and that's why we're doing this.
Yep.
And that's why with the aforementioned price hits and area liquidity, it picks up exactly where it needs to drive
Hmm.
price to the next area of liquidity. And that's
Yep.
what it's doing.
Yep.
So that's what it's doing. I think that's what we kind of like want to really hit on, right? Today, Blaze, like have
Exactly.
traders understand the mindset of the market and how the
Yep.
market works, and in a very high level, simple way,
Hmm.
it's just basically providing liquidity. That's all they're doing, and they have systems that do it.
Exactly.
Now in the day they know where they want. That's why they say, well, they want prices to go lower. They're pricing in, they're
Hmm.
pricing in news, they're pricing all these things. All
Yep.
that means is that they're taking prices lower. They're
Hmm.
picking up orders a little lower because they know that people are getting afraid, or so now they're looking forward, so they're taking prices to that level, and that's
Exactly.
all the algorithm is going to do. Yeah, I'm
Exactly.
focused on taking prices lower. So if
Hmm.
people are willing to take to if people are selling because they're afraid, what is the market going to do? It's going to continue to go lower until it
Exactly.
finds that area, and then
Hmm.
that's where you get into things like value areas, and volume profiles and all that stuff, which is very important because then you know where value is and all that you're going to learn,
Hmm.
in the
Exactly.
future. But if you
Exactly.
know this basic concept, don't think about that the market makers out to get you and all that stuff that they do. Definitely is taking out things, but look at it more like it's doing that because it's supposed to do that.
Yeah.
The system is
Exactly.
supposed. That's why I've told people with the algo that we have.
Hmm.
It's not doing it because we want
It
it to do
is.
it. It's doing it
Yeah.
because there's a calculation in the background, and when it calculates it, what it's supposed to do, it's gonna provide it to you. Yeah,
Hmm.
the RSI is here, or it's green because of this, or it's red because of that, or it's the delta is it's showing higher. Why? Because there's more buyers than sellers, or positive delta, lower. And then you see what I'm saying. So it's not that it's doing it because it's pretty, and because it's doing it because there's calculations in the background doing it to help you understand what
Exactly.
price is doing. And if you
Exactly.
look at it like that, it's totally different, which is
Yeah.
what I want to get into, like with the indicators and the
Oh,
and the
yeah.
because
That's
I
right.
do believe you can trade without indicators. Definitely, if you know market structure, you can trade without indicators.
Hmm.
But if you trade based on market structure,
Hmm.
then you really want to know where those areas of liquidity are. And if it
Yeah.
can draw it out for you, why not? Something as that simple. Draw out my areas of supply and demand, and then I decide if I know if it's going to go lower. I
Hmm.
decide my bias if I think it's going to go higher or lower based on market structure.
Exactly.
So market structure, and then if you have an indicator, then use that. That's why I always say use it as a tool
Yep.
based on the knowledge that you have and
Exactly.
in the market and technical analysis. So
Exactly. And another, like, just the last question, and like, like, I ask this quite often, like, yes, even if you believe the market is rigged, or whatever you want to call it, my question is, like, what will you do about it? Right? What can you do about it? Right? So,
yeah,
the only thing that will help you in the market is understanding how it works
that's
and
right.
find your way around it. That's it.
That's
Right?
it. Yeah, that's great. That's great.
And
If that's a great point. Like, you know what, Robert? You know what, Blaze? You're full of
Mhm.
it. I still think
Yep.
that they have it out to get us. Okay,
Yep.
fine. Then what
Yep.
are you going to do about it? Learn the
Exactly.
way they're doing it. We're teaching you. No matter
Yep.
what, I said it in the beginning. We said it. Yes and no.
Yep.
Yes, it's rigged in a way because they know where everything is, but it's because they're providing liquidity, right? And
Exactly.
it's gonna do it. So we kind of like rig our screw. We set ourselves up to fail by
Yep.
making those mistakes, right? So the
Hmm.
market is not emotional. It's just gonna, hey, the same way it's I want to take money out the market, they want money from the market. So I
Yep.
want money. So what that makes me a bad guy because I
Yep.
want to take as much money as I can from the market? No, that's the name of the game. The
Exactly.
name of the game is for us to duplicate our investments in there, or our trades. So
Exactly.
it's part of it. That's how
Exactly.
they're providing liquidity that they need. They need monies.
You need somebody's monies, so, like, you better learn how to do it, or they take your monies, right? So you're taking somebody's monies. So,
That's right. and
yeah.
and and I think that's why that last statistic we mentioned, how retail traders now eh, their
To
win
know.
rate is a little higher is because of
Yeah.
this.
Yeah.
We're
Exactly.
learning little by little. We're no you know We're always considered dumb money,
Yeah.
but it's changing. It's changing. We got a
Exactly.
lot of retail traders making thousands of dollars a day. You
Yep.
know,
Yep.
so now you have these prop traders now that prop places that provide money for you. So you can trade with $50,000 accounts and make so
Yep.
it's getting better. And we're getting better and we're getting smarter, and
Yep.
hopefully hot trades is a great place to, well, not hopefully, I know it is, it's a great place to learn,
Yeah.
because it's not we're not like those just come and we're gonna yeah, buy here, sell there, or whatever, and then you're like, oh my god, like it's more like, no, we want to teach you,
Exactly.
so you can make your money. And so
Exactly.
far, I mean, it's been, we have a lot. Somebody bought a car cash the other day, right? Because of the
That's amazing,
gains
isn't it?
and all these. Yeah, we're
That's
seeing some amazing stories, so that's
yeah.
great.
Yeah,
And,
and we love seeing stuff like that. Honestly, like
yeah,
it,
yeah.
it gives you that little that little motivation to keep going.
And it motivates us all, and that's another thing. We all get motivated. We all want to do better.
Exactly.
So we all want to do better. And then when we screw up and we do bad, there's people there to hear us. Like my week, you know how I'm real quick.
Hmm.
We're always teaching,
Yep.
and you know we've been, people are happy with us and all that stuff. I would say, but
Yep.
what it is to teach, and then you have your like an off week. You
Yep.
feel like crap. You're like, wow, I trust so much, and like, how did that happen to me? You know what I mean? And
Yep.
it's humbling, because we're not 100%. We're never
Yep.
gonna be. We're never gonna, and especially like, there's times where we just should not trade the market because we're not as fast as the algorithms.
Exactly.
And sometimes we get caught up in that, wanting to get a couple of points off, and
Yep.
it's just we're just getting caught in the chop.
Yep.
We got to learn when not to trade. Just stay out of
Exactly.
it. So those were
Exactly.
kind of like things that happened to me last week because I just got caught up in the hype, and then hearing other people and commenting, and oh, do this or let's try that and blah, blah, blah. And then you
Yeah.
get caught up and you're like, what am I doing? I shouldn't even have gotten into a trade, like.
Yeah.
But anyways,
Yeah. No,
it happens.
yeah, exactly, it happens. So yeah, guys, let us know what you think, right? So just type in yes or no in the comment section if you think the market is rigged, right? And maybe let us know why. And don't forget to hit the like, hit that subscribe, and whatnot. And again, like I said earlier, if you have an interesting topic you'd like us to talk about, right? So just go ahead and put it in the comment section, and we will talk about it. Alrighty. So, Rob, any last words of market rigness before we end
No, no, not
it?
really. Just keep this in mind. If you have to come back and see it before trading and all that, do it because it's gonna change your mindset when you're looking at the charts and everything we're talking about. You're gonna think about the market differently,
Exactly.
And I think if you look at it differently, then now you're gonna be able to have those higher probability.
Hmm.
You're gonna be like, wait a minute, no, I think you see, like just looking at that chart right there, look at those double bottoms, those are
Yep.
areas of liquidity. I'm
Yep.
looking below. I don't see any demand zones there. So I'll wait.
Hmm.
I mean, if we zoom out, there might be a demand zone lower. That's why it dropped. Right. So if
Exactly.
you swipe, there it is, right there. You see, so the
Yeah.
price at some point was gonna go down there, right? So,
Hmm.
anyways, it's just that. Just keep that in mind. Is there a demand below? Then I'll
Yep.
wait. I'm not
Yep.
gonna get in here blindly. I'm gonna wait for
Exactly.
everything to tell me it's reversing. It picked
Yeah.
up the liquidity that I was gonna pick up, but it's
Yeah.
just it's just that. It's
It's
just that.
it's working how it's supposed to work, right? So regardless of like our personal feelings and the emotions and whatnot, like the market is doing what it's supposed to do. And and another thing to keep in mind is, yeah, like this, you can look at this and say, okay, yeah, this is just like mostly for trading. But it's really interesting how, like, you look at a chart, right? And you're like, okay, well, what the stock is pumping or it's crashing because there's news. But then you look at the technicals and everything aligns perfectly, right?
Yeah.
Like we're crashing. Yes, we have bad news, but it's interesting how that stock was crashing right from resistance, right? It's crashing right from resistance. What's that all about, right? So, oh, we're bouncing. Oh my goodness, they have really good news, but it's bouncing from support, right? It's bouncing from an area of liquidity, right? So it's really interesting how that works, right? So again, like really
That's a great
understanding,
example. That's a
yeah,
great example. Or those
yeah,
FOMC meetings, it
exactly,
pops
yeah,
so
exactly,
high up, and it'll go like 50 points up or 40
yeah,
points move, and
yeah.
then you'll see it just come right back down again. Why? Because it left all those orders down there that has to
Yep.
do what it's supposed to do.
Yep.
So the market's telling you, I'm willing. The market's telling you, hey, there's buyers. I'm willing to go higher prices,
Mhm.
but
Yep.
I still gotta come back down and get do that. So
Exactly.
it's in balance at the beginning, but then
Yeah.
it'll go right back. Oh, that's crazy! You see, they took. How could they do that? They're not doing anything. It's just the
Yep.
algorithm is just going back and
Yep.
making sure that it's balancing out the market again.
Yep.
That was a great example to
Yep.
end it. That was a
Yep.
great example.
Already. Okay. Well, again, don't forget to hit the like if you've enjoyed it, and leave a comment, please, and thank you in the comment section. And Rob and I will see you on the next episode, episode 3, Rob. of
Episode 3. Let's see. All
three
right.
via podcast. Bye, guys.